Yes, we are ready for the day. So we were looking into audit, in management audit in different functions. So we have been through quite a lot of things, and we also have few more things in the line to look into. So the one interesting one that we are going to do today is audit of energy and utilities, right from generation and consumption. Fine. So basically we can say this as energy audit. Okay. So, and you know very well how far energy is important for any kind of an industry, let it be manufacturing or let it be service based industry. And using a green energy is now the trend. And then the utilities. So since we have already covered our cost audit, so can you list out the utilities for me? Yes, Anu? Or else you can even type in, I don't know whether the chat box is working. Yeah, if not, then you can type in even in our WhatsApp group, yeah, or you can just unmute and let me know. What are the utilities that come to your mind?
With regards to electricity, no ma'am.
Okay. Okay, you just type in because your voice is too low. I'm not able to hear you. Okay, so well, we come to utilities, right? So we have first in place, let's start from water. So water, that is the fresh water that is used. So utilities are basically those which are, which are required. Okay, the usage of that or the consumption is required for the production purpose. Right from water, then you have RO water, and then you have power, any kind of a power it can be. Then you have fuel that is used. And yeah, so these are all the utilities. So we are going to look into the basic aspects of generation and consumption and how are we going to audit. So first comes electric or natural gas. So either you use electricity or you use natural gas. So what are all the things that you will look into? So first, understanding the process is important. So comes the meter reading, demand based, incorrect rate application can happen, incorrect tax, incorrect implementation of the contract, then erroneous fees and taxes, incorrect application of tariff. So these are all the things which needs to be monitored. Okay. Then coming to water or sewer. Water is the fresh water which is used, sewer is the disposed water, the water that is going to be disposed of. So we have meter reading in that case, how the meters are fixed, how the reading is happening and how the billing is happening. Incorrect application of surcharges, incorrect meter usages. So how utility cost? Utility is also one of the major costs that contributes towards cost of production. So you have direct material, direct labor, direct expenses, then you have cost of utilities. So cost audit report gives a lot of importance to cost of utilities. It deals with each and every utility separately. Okay, even though the sum of cost is shown in the cost sheet, you have to give the annexures or details of what kind of utilities have been used for production. So well, we look at how to reduce the utility cost. First one is ensuring the accuracy of billing by the service providers. Then consumption recording accuracy, regulatory compliances, equipment age and power consumed. So when you look at the energy or the power consumption, when your machine ages, the consumption of power basically goes up, and if it is not well maintained, that's going to affect the production. And when you look at the source of energy, like let it be you are taking connection from the EB board, so how far the lines are maintained, though the maintenance are taken care by the company that is giving you the power supply, but still you got to check whether everything is going on well or not. And if it is through generation of power through DG sets, that is the generators, you have power backup in place. So how far it is maintained, so that whenever there is a power breakdown, the DG set is able to operate and provide the power supply. So these are all the areas where cost can be reduced in case of utilities, especially the power. Then coming to energy audit. So what is energy audit? So it is defined as an activity that serves the purpose of assessing the usage pattern of energy of a factory or energy consuming equipment and identifying the energy saving opportunities. First, read the pattern. Next, you identify the energy saving opportunities. So there are different phases in energy audit. Energy audit is actually it plays a crucial role, okay, in case of industries, especially the manufacturing ones. They just rely on energy. Fine. So phases for energy auditing. First one is analysis of historical energy consumption and cost data. So here comes the costing. So the cost data, that is whenever you look into the energy consumption, okay, what happens is you have to also look back how far the energy consumption has happened in the last, at least for 5 years, and see whether there is a surge in it. If there is a surge, it could be also that you have increased your production time or you have increased your shift timings, due to which the machinery is actually working on 2 shifts. So obviously the power consumption will also go up. But you should always analyze the trend, what has happened. That is historical analysis. Then comes preliminary energy audit with the objects to identify major energy consumption equipment and processes. So usually you go for factories, right? So there will be huge machineries, okay? So the major consumption of power comes, consumed by those machineries. So usually the better way to actually analyze the power consumption is to place meters for those big machines which are consuming lot of power. This will help you to find out where the consumption is going up, or is that because the machinery is aging a lot, okay, due to wear and tear of the machinery also the consumption of power may go up. So that way it will be useful if such controls are placed. So usually when a business or a factory or a manufacturing setup starts with at an initial stage, all these things are not carried out initially. But moving forward, while they scale up the production, at that point of time, if such things are done, okay, like installation of individual meters for each and every machinery, and analysis of energy getting consumed at each level, energy in the sense the power, the fuel that is consumed at machinery level, that will be a better way to manage energy. Then obvious inefficiencies and energy wastage, that is proper shutdown of machinery once the shift is over. So sometimes if it is on, what will happen? The power will be consumed. Even though it is not running, but still it is plugged in and it's on, it will consume power. So this basically it will also monitor how far your direct labor, that is the people who are working on those machinery are aware of the facts on how to start and what are the things they got to do it in order to shut it down. It is as simple as that. Like for example, you use your laptops, okay? So you put it in a sleep mode. So you know the sleep mode saves energy, and at the same time it will not take that much time for you to boot the system. Or else you shut down and then you restart, you have to close up all your workings, operations. So that is an option available. So basically in the process documents itself, in the standards of practice itself, it should be there, the standard set procedure on how to operate a machinery right from starting up and shutting down, or putting it to some other mode, energy saving mode, which will actually enhance the saving of energy. So energy saving just not it related to the machinery, but also the people who, the awareness of the people who work on it. Excuse me. And priority areas for further detailed investigation. Like where we have process costing. So there are different processes that goes into a particular manufacturing sector. So first, process wise, if the meters are installed, it's very easy to find out which process is consuming a lot of power or energy. And then we can target that particular process. Okay. So this is also a part of, I would say, well, we do costing, well, we do cost audit, even this forms part of it. Objective of analyzing historical energy data that we have already discussed. Specific energy consumption. So from the total energy consumption and the production rate, one can derive the specific energy consumption, that is energy consumed per unit of production. Costing always, cost audit always insist upon just not the financial details, but accompanied by the unit details, that is the production details, the quantitative information. So always your cost audit reports gives you an idea about what is cost per unit of production, what is cost of utility per unit of production. That will be helpful in determining where the cost is getting consumed. Okay. So normally, specific energy consumption analysis allows to monitor the overall efficiency of the production process, prepare an accurate energy target for the future in correlation with the planned production rate. See here, energy is getting correlated with the planned production. So this is what we were speaking. Like, well, we analyze the historical data. All of a sudden, that is a surge in energy consumption. That is the power consumption. Well, you look at increase in power consumption, then you should check back what was the production level at that time. Prepare a standard with which the results of energy efficiency measures can be measured, and prepare better energy cost allocation in the future. Normally, any increase, okay, would be considered as loss on efficiency. It could be caused due to aging of the equipment, that is what I was telling. Like you are using an FMCG, right? If it's a new fridge, it will consume less of energy. But when it ages 10 years, 12 years down the line, of course the consumption would go up. Then low production rate of the machinery, that is the energy that it is consuming. For example, if 1000 units is the output of a machinery, by wear and tear and all those things, what happens? It results only in 800 units production. So this could be the low production rate due to aging of the machinery. Frequent breakdown of the machinery due to poor maintenance, improper maintenance. Maintenance is also one of the reasons. Then, in some cases, when the production rate is beyond the normal capacity, this may also lead to higher specific consumption values. So, illustrative steps during energy audit. What are the things? First one, data requirement. You have to collect the data. Only then you can analyze the trend or patterns in it. Then comes data analysis. How do you analyze from each perspective? Let it be from the process, or let it be from the machinery or the cost centers. Sometimes even the machineries, the big machineries are also determined or decided upon to be a cost center. Okay. So this may involve classification of energy efficiency measures. One is short-term measures, immediate psychological actions affecting the attitude of the employees, routine maintenance for energy conservation. This is short-term. While you look at medium-term, small investment on the fluid network, large investment on the engineering aspect. So there could be few things that will actually help you to power save. So this goes in a technical way. Long-term measures, large investments on the interconnection of processes. That is, here the whole process is revamped. Very large investment involving changes in the functioning principle of the process. Well, we look at, these are the requirements for energy audit. This is what is done in energy audit. But what is expected out of an energy auditor? What will he do? One is quantification of energy cost and quantities. See, energy cost, it's very easy to get. But what about the quantities? Then you have to interact with different departments to get the output, to get the data for it. Only then you can find out what is the cost of energy per unit of production. Well, you look at cost of utilities. See, utilities, as I told, it's ranging from water till power. Every utility is measured in a different unit of measurement. But the cost as such is booked in rupees. It's one value. So that is why cost audit report insists upon giving the details of utilities that are consumed, which are having different unit of measurements. So what does it say? What is my power consumption per kilowatt hour? Or what is my water consumption per kiloliter? What is the rate per kiloliter? And how many kiloliters I use it for the production of the output? So that way, since the utilities are measured or it comes with a different unit of measurement, it is being detailed, it's given in a detailed manner. So what is that which is expected out of an energy auditor? First one, we have already discussed, that is quantification of energy cost and quantities. Next, correlate or always correlate the trend of consumption of energy with the production rate. Okay, you cannot do it in isolation. You leave off the production and you say, no, all of a sudden the consumption of energy, power has gone up. How could you say that? If the production has gone up, of course the consumption will also go up. To identify the major energy consuming equipments and processes, that is what sometimes you have even your machineries as cost centers. To identify obvious inefficiency and energy waste, to identify areas for further detailed investigation. Need for energy audit, so that's why we are here. So the need, if you look at types of energy audit, we can look at types, okay. First one is function and type of industry, potential and magnitude of cost reduction. Why it is performed, the type of energy audit to be performed depends on what is the function you are looking at and what kind of an industry is it is. What is the potential and magnitude of cost reduction, how far it can be reduced. So it can be classified in two manner. First one is preliminary audit, preliminary energy audit. Another one is detailed energy audit. Preliminary is relatively a quick exercise. You just go by energy consumption, you go by the units produced, you find out what is the cost of energy per unit of production, do the trend analysis for the last 5 years, you come to a conclusion how far and how effectively the energy is being utilized, what is the estimate scope for saving, and if you look at what are the cost saving methodologies, okay. Like for example, the power consumption, even if we say in a workplace, right, you have all these sensor lights. Why do you have that? Because it saves energy when nobody else is there in the shop floor or the workplace, right? So as you move on, the bulb or the source of energy senses it and only then it glows. It's an innovative way of saving energy using power saving bulbs. Okay, it's not just the energy that is used in the machinery, which is directly related to production, but also the energy that is required for other things, like even lighting up the area where the production is actually happening is also equally important. Set a reference point, identify areas for more detailed study or measurement, and a preliminary energy audit uses existing or easily collectible data. Then coming to detailed energy audit methodology. Okay, so there are two phases in which it happens. One is pre-audit phase, another one is audit phase. Well, we look at pre-audit phase. Whichever kind of audit, it is always recommended you do a factory visit. You do the location where the energy is being utilized. Only then you get an idea about how the process flows, how it is controlled, how the energy is consumed. So familiarizing yourself with the workplace or the scope of area is important over here. So familiarize with the site, that is what I told, and assess the procedures necessary to carry out the energy audit. So initially you have to make a site visit. This will give a lot of idea to the energy auditor. Then during the initial site visit, what does he do? First one, discuss with the site senior management the aims of energy audit. See, always there comes a hindrance. Well, you are an outsider, you go as an auditor for a company, okay? Always, whoever may be the case, they will not be that very open to discuss about the structure and all those things to you, because they feel some kind of an insecurity. This is what I have felt. Well, I went for a factory visit. So first, building up the rapport and giving them a sense of confidence that you are here for something that is valuable, that will be valuable input for the process or for the production. It's not just there, you are there as a watchdog to find out what is going wrong. So that way, it is the way you convince and build up the rapport with the people, especially the production, the people who are in production floor as well as the production heads. They should first understand why you are there in the first place. Okay, so discuss with the site senior management the aims of the energy audit, the scope, the objectives, why you are there, and how is that going to help them. Discuss economic guidelines associated with the recommendations of the audit. Analyze the major consumption data, because you have to get the consumption data from the personnel who is there present. So only when you make him understand why you are there, the purpose behind your presence, only then he will be able to give you the proper data. Obtain site drawings wherever available, like building layout, steam distribution, compressed air distribution, electricity distribution, etc. So now it's mostly controlled through software. So just sitting in a room, you can see how far the flow of things happen, right from let it be steam, let it be air pressure, or let it be the electricity that is generated from the turbine and distributed through the grids, electric grids. Tour the site accompanied by engineering or production. The main aim of visits. What are your main aims? Okay. First one is to identify the main energy consuming areas or plant facilities. So you have to narrow down your audit to those places or those machineries where the consumption is actually high. So this will all happen only when you do a site visit. Then comes the instrumentation or requirement of additional meter facility at user point, like kilowatt hours, steam, oil or gas meters. Then to identify the instrumentation required for carrying out the audit, then plan the time frame within which you are going to do, collect all the macro data and create awareness among the people on lowering the consumption. So this is the initial phase. Second phase, phase 2, is detailed energy audit activities. So whenever possible, checks of plant operations are carried out over extended periods, at nights and weekends, because you are not going to impact the production during the normal working hours. The information that needs to be collected during the detailed audit includes, what are the information? First one is energy consumption by type, source of energy, from where the energy is generated. If they have their solar plant, then that's the source of energy for generation. If they have their own turbines and steam boilers, okay, from the steam boilers the steam is getting into the turbines, and leaving off those which are losing their enthalpy value, the one that is emitted into, one which is used in production and one which is used in generation of electricity, or whether it is both the ways, that is you get from the MSE, the local electricity board as well as during the production, because in case of certain industry, like if you see in case of sugar industry, it is seasonal in nature. So November to March, you can get power generated from your own grids. But during off season, it's not going to happen. You are going to purchase it. So if it is going to be purchased, or are you having, or is the factory having a separate solar plant wherein you can harness solar energy? So all this should be looked into. Next one is material balance data, that is the raw materials, intermediate and final products, recycled materials, use of scrap or waste product, production of byproducts for reuse in other industries. So if you see in case of sugar industries, there are a lot of byproducts that are produced during the process of production of sugar, as well as the distilleries, the alcohols or the spirits are produced in the distilleries. Okay, then energy cost and the tariff data, generation and distribution of site services, like we have already discussed, compressed air, steam, sources of energy supply, electricity from the grid or self-generation, how it is going to happen, potential for fuel substitution, that is combining heat and power generation. So it is exclusively all about energy, generation, distribution and consumption. So your audit starts right from the source, that is generation of energy, how it is distributed to various process, not just distribution, how far it is being well consumed by the processes. All this entire, right from generation till consumption, needs to be analyzed. So if you look, see, technology, process used and equipment details, what is the capacity utilization, amount and type of input material used, water consumption, fuel consumption, electrical energy consumption, steam consumption, other inputs such as compressed air, cooling water, percentage of rejection and reprocessing. So hence energy audit, if you look at it, it is an effective tool in defining and pursuing comprehensive energy management programs. Okay, so this is also important from the view of the society, because energy is one of the scarce resources that's being used. Okay, so any wasteful activity or any inefficiency in consuming energy is going to actually have a bearing impact on the society. So thereby judicial use of energy and proper production, taking out all the inefficiency in the usage of energy, is crucial to any energy audit. So that's the main objective. Okay, then we move on to productivity audit or efficiency audit. So if you look at input-output ratio, what is the formula? input-output ratio.
Out.
Yes?
Output divided by.
Yeah. So what is my productivity? How much input is going to give me a desired output? Well, solving many management accounting problems, we have come across situations where we say 15 kgs of some raw material is used to produce 1 ton of the final product. So here we map the input-output ratio. So 1 ton is the output, is the standard. But what is my actual? Is that more or is that less? If it is more, well and good. If it is less, then it's a problematic area. You should either look at the standards. If there is something wrong with the standards, then you have to revise the standards. But revision of standards is always not recommended. Okay, then every time you can revise the standards. No, that's not the case. You should get into the reasons behind it. Fine. So here if you see, the term productivity is simply putting by output divided by input. Output is your final product, to make understand. Input could be in any forms. Input is just not a raw material which is measured in kgs or tons. It is also the number of laborers who are employed. It is also the machines that is employed. So if you look at the input parameters, it is all different. But the output is going to be the same thing. If sugar is produced, it's going to be in quintals. If spirit is produced, it's going to be in barrel liters. Output quantity is defined. But when you come to the input, which involves different factors which are measured in different units, it becomes a little bit different. So how do you do this productivity analysis? How do you audit it? So a critical examination of efficiency ratio, that is actual production in terms of standard hours to actual hours, is worked out. So hour consumption is the efficiency ratio. Then looking at the activity ratio, that is actual production in terms of standard hours, budgeted production hours in terms of standard hours, may also form the content of the productivity audit. Then comes the concept of productivity is deeply rooted to the production function. If it is rooted to production function, so if you are going to do a production or efficiency audit, of course your things will revolve around it. The main objective or the main thing that needs to be noted is the yardsticks or the standards of measurement and comparison. Only when the standards of measurements are properly used, it can be compared across. It can be in physical terms or in monetary terms. See, monetary terms, it is easy to say. But actually the whole thing depends upon what you do in your variance analysis. So you have come across, for example, if we take material variances, what could be the reason behind the variance between the actuals and the standards or the budgeted ones? If you look at the variance, it could be a price variance or a usage variance or efficiency variance. So price is nothing but the price attached to every unit of raw material that is used. While you look into the usage, you compare the production and the input. The input-output analysis happens and you find whether it is due to usage. Efficiency, what is the input-output ratio of a raw material? How much output it can give, what is the desired output, and what actually it has given. So likewise, it is more or less like your variance analysis. You find out whether it is due to cost, that is the price of the raw material, or whether it is due to the usage, or whether it is due to the inefficiency in production. Okay, so productivity or efficiency should be expressed in terms of major input. Say if raw material is a major component, cost component, then productivity should be expressed as output per unit of raw material or raw material per unit of output. If you remember in our cost audit report, well, we talk about direct materials. even that report insists upon what are all the components of direct materials. Okay, for example, in case of sugar industry, the major component is sugar cane. So how much is, how many, there we say how many kgs of, how many metric tons of sugar cane is consumed or is used to produce these many quintals of sugar. So see, input is in one unit of measurement, output is in another unit of measurement. So you should be able to correlate these two things. Okay. Another one is, what are the major inputs that is required for producing sugar? So apart from this, you use chemicals like sulfur, okay, even lime. So these are all major chemicals that are used. So if you look at cost audit report, right, while you prepare a cost audit report, you get a deeper idea into what the data is looking into. Of course, that is what is required here. How many tons of sugar cane is going to give me these many quintals of sugar? So raw material, is that the major component? So while we do a percentage analysis of cost, we actually find out what are all the major components of my cost of production. So while we calculate the percentages, we will come to know whether it is raw materials that is forming part, or whether it is utilities, whether it is the labor. So usually raw materials becomes the major chunk of cost in any kind of an industry, especially in case of manufacturing sector. Then if electricity is a major component, if you look at utilities and electricity being the major component, then you will have to find what is the electricity per unit of output. In case of direct labor, then in terms of number of direct labor, in terms of man hours, in terms of money, that is the value of wages. For plant and machinery, of course it is capacity utilization, percentage. So what is the 100% capacity? That is installed capacity, available capacity and actual capacity. This needs to be determined. Because installed capacity, for example, if you look at plant and machinery, of course it's there available for 24/7. But when are you going to put to use? You are going to put to use, if you are operating in 2 shifts, it's going to be 8 plus 8, 16 hours. So out of 24 hours, you are able to make it available only for 16 hours. If it is a shift round the clock, then available capacity and installed capacity will be the same. So that is how the capacity utilization should be measured. Then coming to capital employed. Capital employed, it's a financial perspective. So what is the revenue that you are going to get? That is return on investment. What is the profit percentage that you are going to get on capital employed? So while we look at the problems associated with productivity measurement, of course, it is important to do the productivity audit. But where you can go wrong, or where it can be misleading, or where it can be hectic, or what are the problems that will be faced? One is different units or yardsticks of measurement. That is what I have already told you. These many metric tons, this many quintals. These many kiloliters of spirit coming from, it is coming from molasses, which is measured in another perspective with another unit. So where the input and output unit of measurement is different, it becomes difficult to bring in the relationship. Second one is interdependence of different inputs and their integrated nature of work for the common final aim of productivity measurement. It's like you consume the raw material, but it is just not happening at the beginning, but it's happening everywhere in the process. So there is an interdependence thing. So how are you going to segregate? And then the solution of the series of simultaneous equations, even if done by a computer, becomes somewhat subjective in nature. So mathematically you cannot apply. Now this is my result. No, that's not the way. You can, to the extent, arrive at what is the productivity of an organization based on the quantitative information that is flowing to you as well as the financial data that is flowing to you. Fine. So this is all about productivity audit and efficiency audit. Then coming to propriety audit. Give me a second. So what is propriety audit? It's not proprietary, it is propriety. See, audit is done just not for the company's sake, but also for the stakeholders in the company. Stakeholders could be the shareholders, money lenders, suppliers, even the consumers, the government. So propriety audit is audit concerning the decisions of the executives with an emphasis on stakeholders' interest, financial discipline, basically to get audit satisfaction that such decisions are within the framework of rules and regulations which is applicable for that industry. And to advise executives either in preventing or reducing losses and increasing the productivity or improving the performance by timely reporting. That is what is propriety audit. So it actually ensures an expenditure incurred is duly sanctioned by an appropriate authority, but should also investigate the justification and the necessity for it. Okay. So the auditors while conducting the proprietary audit should any case ensure the observance of the following. First one is canons of financial propriety. That is, what is the benefit accrued should be more than the spent. This is nothing but our cost benefit analysis. If you are going to spend money or if you are going to make a huge investment, what is the return that you expect? So initially for 1-2 years it won't be that much, but in the long run the benefit that you actually reap from an investment should be more compared to its cost. That is what is cost benefit analysis. Next comes, no authority should exercise its power of sanctioning expenditure to pass an order which will be directly or indirectly to his advantage. So this is why there is lot of disclosure requirement when it comes to related party transactions. So you know very well in cost audit report we have a separate annexures for related party transactions, wherein all those transactions which are entered into by the company with any of its directors or relatives to the directors, let it be in the field of lending loans or taking loans, making payment interest, making interest payment, or procuring raw materials from the related people. So why it is important? Because that is going to actually influence the expenditure also. So no authority should exercise its power of sanctioning expenditure. Then public money should not be utilized for the benefit of a particular person or a group of people. Like if you see in case of companies where money or capital is raised through issue of shares. Of course, the money that is flowing in from the shareholders is the public money. How diligently it is being used, what transparency level is maintained by the company needs to be looked into. So the public money should not be utilized for the benefit of a group of people or for a particular person. Then the amount of allowances that are granted to meet a particular expenditure should also be regulated. There should not be, it should be an unbiased decision. It should not be a biased one. So to assess the adequacy or otherwise the effect of financial responsibilities, That is why we have proprietary audit in place. So what are all the things? What are all the things that are examined under proprietary audit? First comes whether the technical estimates or the detailed program, cost schedules are being framed that needs to be adhered to, and the adequate reasons for excess of production, or if there is delay in production, and whatever the case may be, there should be proper reason for that. And whether there have been any serious avoidable delays in the progress of the schemes, increasing the total cost of the scheme. That is basically that happens in projects. And whether there has been any wasteful expenditure, including that resulting from the lack of coordination among the various processes in the organization. And whether there have been any losses of recurring nature, even that needs to be targeted. Whether the performance and cost compare with the results obtained in respect of similar scheme in other areas, and whether physical targets have been achieved within the estimated or sanctioned time, and whether the ultimate objectives of the expenditure have been fulfilled. That is, you raise money, whether the expenditure should follow it to for whichever purpose you have raised it. Sometimes what happens, people raise money through equity shares instead of making an investment in a fixed asset or that which is going to give a long-term benefit. Sometimes the financing goes into financing the working capital, which is a pure financial mismanagement. So that is what is looked into in proprietary audit. Okay. Presently, the forms of organization where it is being given. First one is the government companies, of course, because it is dealing with a large of public money in the form of tax money. The Comptroller and Auditor General of India, CAGI, has a right to conduct efficiency cum economy oriented proprietary audit in addition to the statutory audit under its guidelines and instructions. Then under Companies Act, both chartered accountants and cost accountants are empowered to perform financial and cost audit respectively to ensure companies are governed properly, which are proprietary based. See, statutory audit, that is the financial audit, goes to the chartered accountants, and the cost audit relates to the cost accountants, who are going to see how well the funds are managed or governed. So that is why we have an yearly compliance in place. In case of government companies, they may conduct the proprietary audit, the Comptroller and Auditor General. In case of limited companies, that is the shareholders are generally scattered all over the country, they do not have a real say or control over the conduct of the affairs of the company. In that case, the company is in the hands of the board of directors. So the shareholders need assurance whether their funds are being properly or prudently managed. This is in case of companies who are having that is the listed companies. So this is the area of proprietary audit. Got it? So we will take a 10 minutes break and then rejoin for other topics to follow. Fine? So I'll just mute myself. Yeah. We'll meet at 7:40. Hello? Yeah. Am I audible? Shall we continue? Yes, Anu, are you back? Okay, good. Good to go. So CSR, corporate social responsibility. So CSR is one of the aspect which is always disclosed in the statutory audit report as well. So it is gaining momentum. So section 135 of the Companies Act 2013, read with schedule 7 along with the Companies Rules 2014, contains the framework for CSR which becomes applicable to a company listed as well as unlisted. Okay? It's not just the listed company who is going to do this CSR activity, but also unlisted company based on threshold of profits, turnover and net worth. So let's see what is that rule framework. So as stated in rule 2 of 1 of subsection C of the Companies Rules 2014, CSR means and include but is not limited to projects or program relating to activities specified in schedule 7 to the Act, or projects or programs relating to activities undertaken by the board in pursuance of the recommendations of the CSR committee of the board as per the declared CSR policy of the company, subject to the condition that such policy will cover subjects which are enumerated in schedule 7 of the Act. So whatever is given or whatever activities that is that is carried out according to the activities specified under schedule 7 to the Act is going to form part of your corporate social responsibility activity. So it is the initiative of the company to assess and take responsibility for the environment. See, when you look at profit making organization, the companies, of course, the basic existence is to make profits. But how are they making profits? It's by selling their input in the market. So it's the society who are the consumers, and the consumers in turn expect something from the company. It is not just related to the product that they buy. It is also how far the company is going to contribute towards the environment in which the society exists. So that is the main goal of CSR. So it is the social responsibility of the company towards the people of the country or towards the people of the society is what is corporate social responsibility. So if you look into all types of CSR information disclosure are affected by the need for credibility. Some examples are employees to provide confidence in system, establish progress against targets and improve the confidence. Specialist includes analysts, particularly the rating agency, government officials, NGOs, business partners to strengthen the supply chain, communities to establish credibility with the neighbors and local organizations. So in a report entitled The State of Sustainability Assurance, if you see, which was published by the Accountability. So here sustainability assurance is seen as a key element in building the quality and credibility of sustainability reporting. Despite huge variations in the approach adopted, investors, regulators and other stakeholders will become a powerful driver of a sustainability assurance. An effective sustainability assurance will involve multi-stakeholder teams and enable the disclosed information to have a better focus on what is material. So there are different perspectives from the different standards on what CSR sustainability reports are all about. So as an internal auditor, how he will be involved in CSR at various levels. First, he might facilitate or advise management on CSR self-assessment activities. See, of course, these amount that is getting invested, it's not going to give any return to the company. It is an expenditure to the company. But how far this is diligently carried out? It should not be like it's shown in the books of accounts, but it never happened. So there comes the audit perspective to these CSR activities. Because sometimes the company may think, why should I even spend for it? But when it is mandatory, when the proof of things do line up, so there comes the internal auditor role. So internal auditor might become involved in coordinating or participating in CSR report verifications. Proposed expenditure is made in areas demarcated or specified. If it is specified for some purpose, it should be also ensured whether it has been spent for the same purpose or it is just in the statement. So this needs to be checked. So what are the things that an internal auditor plays a role in it? Like for example, when I go for the cost audit thing, I always look back, okay, this is what is the CSR activity that you have carried out for the year. But where is the proof? See, if they have a donation made, then there will be a receipt for that. So proper vouchers, what is the amount involved in it, will all be checked as part of corporate social responsibility. And this is also disclosed because this forms part of your financial report. The statutory audit report will have a mention about how far the company has engaged in corporate social responsibility activities and what is the expenditure in these terms. And as I have already highlighted, this is a reconciliation item between the cost records and the financial records profit, because this is purely financial in nature. This is no way related to the production of the company. That is why CSR expenditure does not form part of your cost of production. Now, internal auditors have an opportunity to make value additions to the CSR process to the organization. How are they going to make is assist in the design or implementation of the CSR management system, perform limited scope audits requested by top management, and perform the compliance audit. Applicability. This needs to be remembered. See, every company meeting any one or more of the following conditions during any immediately financial year shall constitute a committee of its board called Corporate Social Responsibility Committee. So as soon as it achieves any one of these or more of, should constitute this CSR committee. One is net worth of rupees 500 crore or more. Net worth is nothing but your share capital plus reserves and surplus is net worth, that is the shareholders fund, which is 500 crores or more. Or you have a turnover as per P&L which goes 1000 crores or more, or you have a net profit of rupees 5 crores or more. These are the three conditions which makes a company eligible or a company responsible to form a CSR committee. Okay? Constitution of CSR committee. So, what is the composition of people in CSR committee? It shall consist of 3 or more directors, out of which at least one director should be an independent director. And provision to subsection 135 and rule 5 provides that an unlisted company or a private company which is not required to appoint an independent director shall have its CSR committee without such independent director. A private company having only 2 directors on its board shall constitute CSR committee with 2 directors itself. And with respect to a foreign company which is covered under these rules, the CSR committee shall comprise of at least 2 persons, of which one person shall be specified as per section 380 of the Act and another person shall be nominated by the foreign company. So here we have different constitutions. So minimum 3 or more. If the company is having just 2 directors, then those 2 directors. And minimum 3 or 4, more than 3, at least one director should be an independent director. But in case of unlisted companies, in case of privately held company, You will not find an independent director, but it's okay if there is no such director, then you will constitute with the directors you have on the board, with 3 or more. In case of foreign companies, you also have another person who is nominated by the foreign company. So these are all the rules and regulations. First, as to the threshold on net worth, turnover and profits. Second, as to who will constitute or who will form this CSR committee. What are the functions? So only when we know the roles and responsibility of a CSR committee, it will be useful for an internal auditor to actually audit whether they have carried out their roles and responsibility diligently or not. So the CSR committee shall formulate or recommend to the board a CSR policy indicating the CSR activities to be undertaken by the company. Then recommend amount of expenditure to be incurred on CSR activities and monitor the CSR policy. So this is what the CSR committee will propose to the board. Now what are the functions of the board in this regard? First one, approve the CSR policy and disclose the contents in board report and place on the company's website. Ensure that CSR activities are undertaken. It should not be just for the purpose of doing it, you put it in papers and nothing happens behind it. Ensure the CSR amount, that is at least 2% of average net profits made during the 3 immediately preceding financial years is spent. So here this calculation, at least 2% of average net profits for the 3 years preceding the year is spent. If it fails, then the board shall report it, specifying the reasons for not spending the amount. For spending the CSR amount, the company shall give preference to the local areas and areas around it where it operates, because that is the area that is going to get an immediate impact of the mere existence of the company over there. An average net profit shall be calculated under section 198, which is profit before taxation, PBT. So while we say at least 2% of average net profits, what is that net profit? It should be a PBT, profit before tax, and that should be an average for 3 preceding financial years. 2% of PBT of average PBT of 3 years preceding the financial year should be at least spent for CSR. What does the Schedule 7 of the Act says? So we have already seen whatever activities are specified in the Schedule 7. If the spending is happening in those activities, then it will be taken as CSR activity. So what are the things? One is eradicating hunger, poverty and malnutrition. So they might be funding some schemes taking care of such programs, like it could be a meal, midday meal or something else. Okay, then promoting education. So you have some donations to the educational societies, promoting gender equality, empowering women, ensuring environmental sustainability, protection of natural heritage, art and culture, that is locally, measures for the benefit of armed forces, training to promote rural sports, contribution to PM CARES fund, contribution to incubators or research and development projects, rural development projects, slum area development or disaster management. So there are 12 different activities that are being specified under Schedule 7 of the Companies Act. Any contribution towards any of these activities will be taken as corporate social responsibility activity expenditure. It will be considered in that. The central government has notified the company's CSR policy rules 2014 containing 9 rules and format for annual report on CSR activities. So this is why it is gaining momentum. So if you look at the statutory audit report, whichever is available on Google search, in an open search, you will always find a mention about the CSR activity over there. Route through which the company can implement CSR activity. Either they can spend directly the CSR amount on the activities that has been specified here under Schedule 7 of the Act, or through its own non-profit foundation, they can set up to facilitate this initiative. That is, any NGOs, if they are having any non-profit organizations, sister concerns, as their sister concerns, then they can facilitate through that source also. Through company under Section 8 registered trust society established by center, state government or other entity established under an act of parliament or state legislature. Through non-registered organization, it could be trust society, provided that entity would need to have been established track record of 3 years undertaking similar activities, or collaborating or pooling their resources with other companies. There could be any routes it can take, but at last it should go towards whatever is stated under Schedule 7 of the Companies Act. Then coming to economic performance. Direct economic value generated and distributed, including revenues, operating cost, employee compensation, donations, other community investments and payment to capital providers and governments. Financial implications and other risks and opportunities for the organization activities due to climate change, and significant financial assistance received. So this is the economic performance. So here, what are the things that one need to understand and remember? In a nutshell, what is CSR activity? How should the CSR policy be framed? Who is going to constitute the CSR committee? What are the activities that are taken under CSR activities as per the Schedule 7 of the Act, and how this can be implemented through different routes. So in a nutshell, if you remember all these things, whenever there is a question on CSR, corporate social responsibility spending, you can put all these things. Fine. So the next topic is social cost benefit analysis audit. See, cost benefit, it is easy to do. But when we look at the social perspective, the quantification becomes a bit difficult in case of social cost benefit analysis. So let's look into what this social cost benefit analysis audit is all about. So it is a methodological and rational process of identifying, evaluating and assessing the benefits. Benefit is your output and the cost is your input, associated with alternative activities which will effectively accomplish economic targets and social goals. So here we are not speaking about the profit that you are going to churn out of the project or profit that you are going to target for that year. So it's relatively a new concept. So presently the appraisal process of private concerns projects takes into account financial aspects, commercial aspects and technical aspects. If you see financial aspects, viability based on return on investment. Commercial aspects, that is marketing plan and strategies. Technical aspects is technical parameters of project specification. But what happens is it ignores the socio-economic aspect. That is whether the project is socially desirable and worthwhile. Is that going to result in the betterment of the life of the people? It is the socio-economic aspect. So the evaluation process does not consider the social cost or cost of external diseconomies. Say shifting of labor from one to another sector. So if we look at the example, it will be much better. For example, the employment of one laborer by a commercial enterprise. What happens? It deprives the society of the benefits it was actually receiving by engaging that laborer, say in terms of agriculture. So people shifting from agriculture sector to the industrial sector, is going to actually result in drop in agriculture produce. If there is a drop in an agriculture produce, it's going to directly affect the life of the people living. So what is the cost of shift of the laborer from agriculture sector to an industrial sector is what is the social cost benefit analysis. So benefits can be defined by the goods and services that is contributed in real terms by such a sector, and the real cost of scarce and surplus resources used in a project, or opportunity cost, and the shadow price. So the net benefit to the society is the excess of benefit over the cost. So if we look at the basic requirements, what are the essentials for SCB analysis, that is social cost benefit analysis? First one is identify and define the objectives of the project or intended activity. Identify and measure the future benefits that are accruable, direct and indirect. Then identify and measure the relevant cost, which are direct and indirect. It also includes the imputed cost. Imputed cost is nothing but your opportunity cost. Ascertain the present value of net benefits, including the choice of a discounting factor. Because while we look into shift of labor from agriculture sector to an industrial sector, the benefit that you are going to reap is across too many years. So therefore, the discounting factor needs to be applied for the benefits that you are going to receive in future. So you are going to discount your future benefits to the present value to see it whether it is worthwhile or not in terms of cost with related to benefit. Because cost is something that is you are going to incur today. Benefit is something that you are going to reap across many years, which is going to come in future. So that is why a choice of discounting factor is taken into account. So which percentage will you take as a discounting factor? So here while we talk about the opportunity cost, you take the opportunity cost percentage and apply it in order to find out the present value of future benefits that we are going to reap. So there are different techniques under SCB analysis, social cost benefit analysis. First comes UNIDO methodology, then comes Little and Mirrlees approach, and Indian Planning Commission methodology. So what do we do in UNIDO method? Uses the equivalent consumption at the critical consumption level. That is by an application of DCF technique, the social IRR, that is internal rate of return, where there is no profit or no loss. That is, the benefit that you get is equal to the cost, can be calculated as the yardstick for the measurement. And under L&M approach uses the uncommitted social income in free foreign exchange in the hands of the government. So this can also be improved by the DCF technique. Well, coming to Indian Planning Commission method, it uses the uncommitted social income in the hands of the government, but revalued at the exchange rate. So these are all some specific methodologies which are used for analysis of projects for social profitability. So if we see the social cost benefit analysis in another perspective, for example, in case of smart cities where there is a lot of metro construction which is going on. So think about the labor who are involved in it. So you have laborers moving from agriculture to such smart cities where they are put into the construction as construction workers. So the shift from the agriculture sector to the service providing sector needs to be analyzed from the social cost benefit perspective. So if you see, basically this is for the government projects which is being rolled out. I cannot say that this is specific to a company where this social cost benefit analysis will be taken into consideration, because in case of companies already we have CSR. How is that? They are paying back to the society. When it comes to social cost benefit analysis, it is at the macro level. It's at the economic level or the government level. So we cannot drill down to the social cost benefit analysis of a particular industry or a company as such. So it is to the industries that contributes to a particular sectors. So if you just split the economy into different sectors, how far is the social cost benefit analysis. That can be only assessed through this. Fine. And then, okay, so almost we are done with. Then comes evaluation of corporate image. So corporate image is nothing but the brand value. Okay. So how are we going to evaluate the corporate image? Or will this evaluation be forming part of your accounting? No, of course not. But corporate image also helps a company to drive its profits, to promote its message to the society. Got it? So while coming to evaluation of corporate image, excuse me. So corporate image is the reflection of an organization in the minds of stakeholders and society at large. So this corporate image builds up over a time of period. So in case of accounting, how is this corporate image evaluated and shown in books of accounts? Can you tell me? Yes. What is that we show on the asset side of the balance sheet? The brand value or the corporate image. Yes, I'm not able to hear you. Can you just type in the message in the WhatsApp? Yes, goodwill. But is that always valued? No. Usually when there is a merger, acquisition or a takeover, goodwill is valued and it forms part of the valuation, the consideration that is paid for it. So basically an established company or an organization will have this corporate image which will fetch profits. Okay. For example, if you look at Tata products, what comes to your mind? Or if you look at, for example, Mama Earth products, what comes to your mind? Just type in whatever you feel in the WhatsApp chat. Yes. So what comes to your mind when you think about established brands or products? Why do you think, or why do you always opt to go for the same thing again and again? What are the reasons behind it? Good governance, that is what is the ethics that they follow. How far they are transparent. Yes. Then holistic view while running the business, that is at the strategic level itself. Yes, but as a society, what do we consume from them? The good quality products that they maintain. It's not like one time you get a quality product, the other time you get a defective one. So how far they are good in maintaining the customer relationship? Okay, so that makes us to go again with it, right? So here if you see the quality of products that they offer, the ethics of its management. Ethics is here, the values that they carry, okay, the organization carries, employee relationships, attitude towards customers, quality and service to customers. All these things form part of a corporate image, in developing a corporate image. So from customer point of view, how will the customer judge or gauge? He will say, okay, how far the qualitative products are offered to me, how prompt it is, how far the after sales services offered to me. When it comes to shareholders, what is the financial growth or what is the growth of the company going forward, and how well the financial performance is consistent in nature. The supplier will be interested in the company's liquidity and ability in repaying its debts. Banks and financial institutions will also be interested in that. Government will look at how far they are prompt in paying the taxes to the company, taxes to the government. Employees look for steady career growth and smooth industrial relationships. So there are different stakeholders in a company, and everybody looks at the company from these perspectives. So a company over a period of time, when it is able to cater to the needs or expectation, meet the expectation of these people, of these interested groups, then there comes building up of corporate image. Okay? So the elements of corporate image. First comes the core business and financial performance of the company, the reputation and performance of its brand, that is called the brand value, brand equity, its reputation for innovation or technological processes. For example, when we look into the automobile industry, the R&D plays an important role for those companies, the technological upgradation. So now the shift to EV vehicles. Even when we look at Tesla, we have even AI driven vehicles, wherein it is completely driverless driving, right? So these are all the innovations and the technology. That is what is looked into. Its policies towards its salaried employees and workers, that is going beyond just giving salaries. The safety, the security that they give for the jobs, the health benefits, okay, and also the work-life balance. It is also one of the social aspect. And then its external relations with customers, stockholders and the community, the perceived trends in the market in which it operates as seen by the public. Promoter or leadership also acts in favor in building good corporate image. The person who is the face of the organization also plays an important role in boosting the corporate image. Got it? Then, coming to measuring the corporate image. How are we going to measure it? See, measurement is subjective in nature. So there are so many perspectives from which it can be measured. But how are we going to do? Corporations evaluate their image much as politicians do by the surveying. So whenever you call a customer care service, you are always given a feedback survey, a link which is circulated on which you express your level of satisfaction. Even right from using the particular website, even they ask, like even if you do net banking, says how far you are being satisfied with the net banking. Of course there is an option to skip, but at the same time the feedbacks are taken from the users and they play an important role in framing or in maintaining the corporate image. This is one way of measuring. Let it be employee satisfaction. They employ the methodology of marketing surveys used both in polling and in support of advertising. The investigators select appropriate samples of the public and interview them. There are also telephonic surveys They use statistical methods of extrapolation to project from the sample what the public as a whole think. Corporation of course also rely on much harder measures such as sales, stock performance. Surveys of the corporate image are sometimes motivated by sagging sales and a miserable press. Of course, there could be also the message that is conveyed by the media. Okay. So the theory of corporate image holds that all things equal, a well-informed public will help a company to achieve higher profits and sales. Then coming to business and corporate image. So it is basically linked with reputational risk, reputation among its employees, customers, vendors, neighbors, that is all the different stakeholders. The process continues in many ways. In the choice of brand names to be used, right from the website design, company's website design, how far it is user friendly, okay, there comes the e-commerce in place, the quality of its products or services, its promptness in paying bills, its effectiveness in mounting promotions, and so on. How is the evaluation happens? The various approaches to be taken by the management auditor to evaluate the corporate image are as follows. First one, he should prepare a list of desirable attributes against which the company is going to be measured. The attributes should be classified into main groups and subgroups, giving specific qualification. And weights needs to be assigned to each of these attributes. Not all the attributes are in the same, will have the same standing. Then involve experts in the respective fields in rating the qualifications and the attributes. Then the ratings are summarized under the selected groups and present a composite evaluation of different attributes, thereby giving a comparative picture between actual and the anticipated results. So what are the methodologies that are being used? One is the graphical method, which is up-to-date graphs which are maintained for each of the attribute of public under evaluation. It could be product, consumers, shareholders, lenders. If you go through the business magazines, right, you get all these bars, charts, representations where you can actually find these graphical methods. Then you have point methods, that is point system. Well, you do 1 to 5 is the scale, or 0 to 5 is the scale, where 0 being the least and 5 being excellent. So there could be a point system that is attached to the surveys. Index method, ideal indices are developed and actual attributes are compared with them. Survey method, taking into account the sample of population. Then the ratio method, ratio is nothing but analysis of events and trends. Position analysis, depending upon what is the market size, what is the market share, how far it is stable, and method of comparison. Comparison is actual with that of the budgeted. So all these methods are employed by a management auditor to carry out the evaluation of the corporate image. Okay. But in first place, why do you have to do this? Is the company going to benefit out of it? Can you list down whatever the things that you feel that the evaluation of corporate image will help a company to do so? Yeah? Can you just list your things for that? Yes. So what are the things, or how the corporate image is going to help the organization? Yes, I'm getting certain responses. Let me look at it. Yes, brand value. In what way it is going to benefit? Yes, customer satisfaction, employee satisfaction, get more business due to goodwill. Yes, because if the corporate image is going to get improvised, right? Yes, supplier support too. Getting loans will also be easy. Right, financial help. Even Anu is typing. Let me see what is she. Expand its business, that is diversification of business. That's true. How it is going to diversify its business. That's a valid point. And raising finance through stock market becomes easier. Expand its business, yeah, can introduce new segment. That's correct. Expansion in form of segments. Yes. Forward and back integration. What is this forward and back integration? With reference to I didn't get the understanding of backward integration. I'm just waiting for the answer. Other things are all fine. But what is this backward integration? Company with good brands can expand their hands in backward integration. So backward integration is what is in terms of revenue, or what is that you are referring to? Is that somewhere related to supply chain? Okay, in terms of improving profits. Okay, so they can take over different roles. Like primarily if you look at backward integration, so it is a business strategy where a company expands its operations to take over the task which were previously performed by its suppliers. So it can take up, if we look at the supply chain, right? It starts right from the procurement till it gets distributed to the end customer, the entire chain of activities that happens. So in this scenario, the company can play its role anywhere, and through its corporate image, it can slowly take up all those processes which were performed by the outsider. It can bring that into its scope. Am I right, Rakesh? That is what you meant by backward integration? Yeah, okay. So yeah, I'm right in that perspective. So that is what is the benefits of a positive image. Okay. And how do you build it up? Of course, through advertising and your physical, your presence where social activities happen, that will have an impact. Manufacture of quality products and customer service. Provision of social amenities, how far you pay back to the society and contribution of the organization at times of calamities, like even now when the war is going on, right? So the contribution, the support from these industries are going to actually boost their corporate image, like wars, flood, drought, epidemics, and all this case, even in case of pandemics. Fine. So this is all about corporate image. Then in our next session, we will be moving through audit in different managerial functions, which is much easier. Okay. And what else we have? Of course, various corporate divisions and departments. And ESG audit. ESG is Enterprise Solution Group Audit. So with that, we will be completing it, and then we will move on to the important aspect of information system. So if you look into our syllabus completion, I am just forecasting, like if we are able to complete this study note 12 effectively in our next session in Wednesday, then it will go for another 2 sessions while it comes to the security audit. Okay, so that is important, because in now while we talk about cyber security and stuff, right? So it has a real importance where we have this AI integrated stuff. So what are all the benefits as well as what are all the disadvantages that can come to us? So what I want is from you is to have a 2-way discussion. Of course, you can post your views in the Google WhatsApp, I mean in the WhatsApp itself, so that we can have a very good healthy discussion on the cyber security and the security in case of that is information system security audit and stuff. Fine. So that will be our last module. So I just anticipate to complete our syllabus by next week, so that you have ample time for your revision. Got it? So that's all from my side for today. Thank you all and good night.